The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 4th magnificent Monday edition of today's, well, it's not the opening bell, this is the Money Masters show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do everything we can to have a magical Monday. And welcome to all our new listeners, viewers out there who are watching us on Tiger TV. Of course, we come through the eSignal platform, live through the eSignal platform. And you know, folks, if you are looking to test drive some charting software, go over to the homepage of eSignal, give them a call. Tell them that we sent you here from TFNN. They'll give you a 60-day free trial, unlike the 30-day free trial that they have on their website out there. Great charting application. You'll be able to follow along with the charts as we do here each and every day. And we do 10 hours of live programming. Things kick off for us here each morning now at 8 a.m. We've got John Logan, who does a show called the Global Market Pulse. He kicks things off. We go all the way till 6 p.m. each and every trading session. Now, it's an interactive call-in talk show. That means you can give us a call, and we can discuss your stock chart, your thoughts, what you're looking at. I'll give you my thoughts. We can take a look at the bull and the bear case, as we should when we take a look at each and every stock chart out there. Our call number is 877-927-6648. You can call us internationally as well at 727-445-1044. Love to take your call, and I know that apprehension in calling into a live talk show. I will make it as easy as I can for you. You know, nothing helps your day like expanding and overcoming some hurdles out there. Today, I'll go ahead this morning for the next hour. We'll take a look at A to B equals CD patterns. We'll use Fibonacci expansions and contraction. We'll take a look at the bulls and bears, the signs that they make for you and I each and every day. And we do that using Japanese candlestick charting. It is Magnificent Monday. Let's both have a magical day out there. I'm Steve Rhodes. This is TFNN, and welcome to the show. Right now, we've got the Dow is up 16 points out there. No big deal. The S&P is up 4.5. NASDAQ's up 20. She's trading out at 43.73. Russell 2000 up 4 points, trading out at 11.19. We've got gold back $3. We've got silver off a penny. Light sweet crude now up about 30 cents. It's trading out at 98.16. Let me take a quick peek here and see what's going on across the globe. Over in Germany, the DAX is off 18 points. The FTSE is giving back some of its gains this morning. It is up 15 points. But let's focus in on our markets. Let's go see what we have going on out here. Let's take a look at the ETFs. So let's start off by taking a look here at we'll start off by taking a look at the SPYs. As we went to the closing segment of the last show, we were taking a look at the QQQ. I will tell you one thing that I noted on the Qs here was that price just on Friday came down to a trend line. So the Qs have not broken a trend whatsoever. They are still extremely, and I do mean extremely strong. Even with Thursday and Friday's action, they haven't made a 0.382 retracement. That would be normal. That would be natural. That would be nothing, especially in a market that was down. Now, that's not the case when we take a look at the SPY chart out here. If we take a look at the SPYs and we come to the lows out here in April, and that's really our most significant swing point low. So we'll come down to the April 11th level inside of the SPY, and we'll come up to the high that was put in here. Oh, I didn't mean to do that. Let me put that back in the screen here. So if we take a look at the going from the high to the low, there we go. Now we're in good shape here. What these Qs have not done is made the 0.382 retracement. What the SPYs have done is they have made that 0.382 retracement. Now, 0.382 retracement, 192.28 is a number. We're trading at 192.93 right now. If the SPYs, if the sellers still have it in for the buyers, still have it in for the bulls. So if the bears have it in for the bulls, you're likely to see a price movement down to the 188.09 level, and we'll see this. We'll see Friday's low get cracked. Friday's low was 191.57 out here. Other than some substantial volume, which took place, and there was substantial volume. That was on Thursday and Friday. The retracement here has been pretty meek and mild, but the volume is really the key here. We take a look at the SPYs, and that says that the SPYs ought to have, on any bounce here, ought to have some real strong resistance at one of two levels. The two levels we would look at would be the low of July 30th, and that low is 196.16, because we have a gap there, and those gaps are areas that are typically walls of either support or resistance. Since these were gaps down, these are going to be our areas of resistance. And it's either going to be that or it's going to be the high from the trading session from July 31st, and that was 195.78. So any bounce, you have to be paying attention to what goes on there. If, in fact, the SPYs are able to close the gap, meaning to close above 196.16, that would suggest that the highs would be tested again in the 199.06 level. So the SPYs here still looking pretty decent, with the exception of Thursday and Friday's volume out there, and the fact that they have maintained the 0.382 retracement level. Let's go see what's going on inside of the diamonds. Now, the diamonds a whole different story out there. The diamonds are up 12 pennies right now. The diamonds had pulled back substantially. If we go take a look at the April level, so that we use the same April level, we're going to use April 11th. What we'll see is the retracement area is at the 0.618 area. And the 0.618 area, that is a normal retracement inside of a move. And that level, by the way, 164.25. Any close below Friday's low, that low is 164.01. You're likely to see a move down to the 0.786 area, 162.23. But I would hearken to say that not would it be a move down to 162.33. It would more likely be a move down to about the 159.88 level into the lows of April 11th out there. And then you want to monitor volume, because the volume at that swing point low is at the 11 million shares that traded hands that day. So that's what the Dow diamonds are looking at. Let's take a look at the IWM, the small caps out here. Small caps right now, they're trading out at 110.80. They're up by 12 pennies out here. So no great shakes. The the Russell 2000. Let me get rid of these A to B equals CD down patterns. We can always draw those back in here. Now, in the case of the Russell, the IWM, let's go ahead and put one of the AB equals CD down patterns that are in place out here. And the A point is going to be the high from July 1st. That price point is out at 120.97. Your B point is going to be the low. And there's a couple A to B equals CD patterns that could be forming out here inside of the IWM. The B point is the low from July the 10th, and your C point was 2 trading sessions later as it made a bounce. 1-to-1 A to B equals CD gives you a price projection of 109.46. The actual intra-session low on Friday was only at 109.86. 109.86 versus 46, pretty darn close, but no cigar out here. Any close below 109.86 in, what you're likely to see is not really just a move to the 1-to-1 A to B equals CD. You're more likely to see a move to the 1-to-1.272 pattern at 107.56, which also would then be a test of that hammer candle, and that is from May 15th out there. And that low is at 107.44, and the volume there is 75 million shares. So that's the swing point low. As price was moving down on Friday, it had 67 million shares. The day before, 61 million shares, and that high volume low out there is 75 million shares. That's back from May 15th. So interesting to see that volume is kind of just so-so as the IWM comes back to its consolidation lows. Now, the real key here inside the IWM, if price and facts break to the downside, is the mere fact of this larger consolidation pattern that is going on inside of the markets. And the reason why that's important, let me go ahead and edit the screen out here. Let me go ahead and remove the market profiles. So we just clean up the screen. I've done this in the past, but it's always worthwhile to do it again. If we take a look at the consolidation level, it's somewhere in that 107, 40-ish type range. The low on February 5th, 107.27. The low on May 15th, as we mentioned earlier, 107.44. That's a pretty significant level of support or potential support, because any break of that area and typical consolidation formats out here, the top of the consolidation happens to be the high volume high at the 120.58 level. So you could take the difference between 120.58 and 107. We'll call that 110. We'll call that 13 points. And any break of the consolidation low or high is another 13 points to the upside or to the downside out there. So you want to keep a close eye on the IWM, on the Russell 2000, to see what, in fact, it does. Now, if we come back and we go take a look at the Qs out here, the QQQ ETF up 31 cents right now. The Qs here, you'll see just how strong they are. We can draw that trend line in right here. The trend line that I'm taking a look at is coming off of that April 15th low out here. As we take a look at that trend line, we go from that low, and our next touch points, you'll see out here that the Qs had just simply moved right into an existing rising trend line as they did that in Friday's session. Now, volume as it was coming back into that trend line, well, it was high. It was 60 million shares. And ordinarily, that might scare most folks out there. I would tell you just the opposite. It's a signal that a bottom is actually trying to be formed inside of the Qs. If you go back and you take a look at the Qs for several years, you will see that bottoms get formed with high volume. If you look at October 9th, 2013, as an example, you had 64 million shares. The day before that was 43 million shares out there. The Qs forming a bottom with volume. Same type of signal back here in February, not February 5th, but February 3rd. So this could take a couple days for this to potentially form. On February 3rd, you had 66 million shares as a low was being formed. It took a little bit longer here as lows were being formed here in April, but nonetheless, you had volume of 84 million shares on April 15th out there. Excuse me. That's more of a signature of a bottom. Versus anything else. Now, if the trend line gets broken, the question is, where does price pull back to? We'll just use a couple of different things to use as our monitor. First is going to be our retracement level. So if we go from that low to the high that came in out here on the trading session of July 24th, what you'll see is that the 0.382 level is 92.07. So that ought to be the first stop on a break of this trend line, 92.07. So any close below Friday's low out there, which is 94.04, that's what you ought to see take place. Even more natural, more normal, would be a move down into this little consolidation, this little base that had formed inside of the Qs, and that's at the 88.72 area. That's your 0.618 retracement. But how you'd really time this is you would be looking at the Q chart. You would also be looking, you'd have to look at the IWM to see what's going on at its consolidation lows out there. And you'd also be so you have to really take a look at all three of them, maybe all four of them at the same time to try to put everything together. Now, inside the Qs are neither overbought nor oversold. They're a 14-day relative strength indicators at 47.67 as we speak. That is not the case and I didn't point that out, if we were to take a look at the diamonds, if we were to take a look at the SPYs. You'll see right now the 14-period relative strength indicator out here. You'll see it's at 29.07. So the diamonds are in that oversold territory. So we'll just see how the day plays out. But that's what's going on inside of the four ETFs for the indexes out there. Our call number again is 877-927-6648. Dow's off a point, S&P up about 2. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the show, folks. You got the Dow's up about 10 points. S&P's up 3.5. NASDAQ Composite up 15. Lead the charge dollar-wise to the upside is Priceline. That's up 13 points, up a little over 1%. Ligand Pharmaceuticals, LGND, that's up 11%, up $5 and change. Amazon's up about 2%, up $5. Tesla up 460. Tesla trying to go attack its high volume high out there on a daily. It's also got a high volume on a weekly. Baidu is up $4. Tesla, as I mentioned, up 4. You've got Kihu 360 Technologies. That's up $3 and change. To the downside, Kors, Michael Kors, boy, making all kinds of money to the bottom line and top line, blowing away the numbers. Nonetheless, it's trading up 7% right now. I think Michael Kors has had a couple of days of institutional selling. It's off 572. Insmed down 24%. I believe there's a spin-off there. Noble Corp down 13%. Alir Inc., ALR is a ticker symbol. That's down 10%. ITT Education, that's down 27%. ESI is the ticker symbol. Let's go check in on that. That is down with some volume out here. Let's take a look at this stock chart. Now, this has had some real trouble. This has had institutional selling signatures in here big time. The first one that showed up on our screen, high volume bar to the downside, wide price spread. and that was on the trading session of January 30th. That had 4.3 million shares to the downside. Let me clean up the chart here just a tad. I'm going to turn, when I say clean it up, I'm going to turn a few things off because we can always turn those back on. So as we take a look at this stock chart here, what I really want to show you is how price came back, in essence, into a breakdown area. This is just the opposite of a breakout area. That's a trading session. We're looking at ITT Education. Its ticker symbol is ESI, and it's a daily chart that we're taking a look at. And the first sign of institutional selling in this thing, this at least on the chart time frame that we're looking at, which takes us back into September 2013. So we're back nearly a year on this stock chart. You saw real institutional selling. That's marked down. That's on January 3rd, much like if you were to go into a retail store out there, Macy's and Nordstrom's, whichever store, and you were to see markdown, that's telling you they're getting rid of product, right? Well, in a stock chart, markdown, the signature there is a wide-ranging bar to the downside and big volume. That's exactly what ESI, or ITT Educational Services, had on January 30th. Now, price here came all the way back almost into the area where it broke down. You got to use a little bit of a range out here, right? The breakdown area, you'd say, is the top of the January 30th candle session. That's at 37.34. Price made its way back into the February 25th high, which was 36.06. So, okay, it didn't make it all the way out there. It was with some light volume. And in the very next trading session, big old bearish engulfing candle consumed the three prior sessions, and what? It had some additional volume to the downside. But that was telling you had some folks that were still out there ready to mark down the software. Then we saw some real markdown, right? Remember, the first markdown, you get 20% off or something like that at a retail store. And so there was your first markdown. Your second markdown inside ITT Education Services, where they were giving you 40% off or what have you, was on May 22nd, 5.6 million shares. Wide price spread. Make sure you fill in the gaps out there. Accelerated volume to the downside. In this case here, it never made it back to the breakdown area. And now it is having another breakdown with accelerated volume. Already 2.2 million shares in just less than 1 hour of trading out there. This does not look good. In fact, there is basically, well, let me put this on a weekly time frame. We'll get a feel for who's in the money and who is not in the money as we take a look at its weekly chart out here. And this will show us, well, let me keep pulling it back here. So far, we haven't found anybody in the money in this equity. Still nobody in the money. Let me put this on a monthly chart. Let me do that. That's going to make it a little bit easier because you got to go back quite a ways on a weekly chart. So this thing does not look good. So in order to have been in the money inside this equity, you would have had to have bought this and held this going back to about February of 2001. Out there. Not looking good. It is making, on the monthly chart, interestingly enough, it is making a lower low with less relative weakness out there. But, folks, that is not a reason to go try to jump in front of ESI, ITT Educational Services. Let's take a look at, taking a look at that. So if I'm going to flip this around right now, right? And if we take a look at this, I'm going to go switch over to the gold chart because we just took a look at ITT, Education Services, how on that first breakdown, how price had come back into a breakdown area. Now let's take a look at the opposite, which is coming into a breakout area, and that's going to be gold. We're going to take a look at gold on a daily chart out here. And on the gold chart, I'm going to go ahead and I'm going to turn off those same, we'll have to do it when we get back from this breakout here. But we'll take a look at gold. We'll take a look at that breakout session, which is key for us, which is June 19th. 877-927-6648. Steve Rhodes for TFNN. Thanks so much for joining us, folks. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 10 points. S&P's up 4. NASDAQ is up 12. I think the best thing we can say about the markets right now, it looks to be a truce between the bulls and the bears out here, as the markets are not doing too much at this stage. We'll see how long that ceasefire lasts inside of the markets. Let's go take a look at gold. I mentioned gold. We were, before the in that last segment, we were taking a look at ITT services out here, and we were taking a look at how price had moved back into a breakdown area. Now we're switching over. We're taking a look at gold. We're looking at a daily chart out here, and we're taking a look at the exact opposite of that trade. And as we take a look at the gold, it takes us back to the trading session of June 19th. On June 19th, you had accelerated volume. You had wide price spread. The low of that trading session is 1277. The high is at 1322.80, and price is really traveling with inside that. So price right now is trying to come back, or it has come back, into the breakout level. Now, we haven't seen any kind of bullish reversal signal here on a daily chart. The key level to be watching certainly is going to be the low of that June 19th area, and that's going to be 1277. Any break of that suggests that, okay, we're going to see lower price because the support that should be there is not. But really, you want to go back a couple of of bars. I would say you go back to that little junior swing point from June 17th. Any close below 1258 is what probably spells trouble inside of gold. And if we take a look at the A to B equals CD down patterns that you could look at inside of a gold, because we had some wide price spread and accelerated volume on the trading session here of July 14th. The A pattern here, so you've got competing patterns in essence. The A point is going to be the high from July 10th. The B is going to be the low from July 15th. And the BC point is going to be the high of either the 17th, which was 1326.70 at 1326.70. 1-to-1 A to B equals CD gets you to that 1272 level. 1-to-1.272 gets you into 1257. That would be testing that session from June 17th. So any break below that would be trouble for gold, because there's a potential larger A to B equals CD pattern. Likewise, if gold can find some footing as it comes back into this breakout area, it could in fact be an A to B equals CD to the upside. So right now it's kind of like in between, right? What is gold trying to do? If we take a look at the A to B equals CD to the upside, you'd use as your lows the June 3rd level. You'd use as the high the swing from July 10th, and you'd use as your low somewhere, maybe it was Fridays or Thursdays, a low around 1280.60. 1-to-1 to the upside would take you into the 1387 level out there. If we start adding a couple of things back, we add our market profiles. What we're going to see on a daily chart is prices below the market profile low. That says, hey, it's not okay to be long here. And that market profile low is 1303.70. So a close above that gets you back into maybe neutral to bullish area. A close above 1326, that would be bullish. Of course, taking out 1347.60 would be very bullish. That's the B point of a potential A to B equals CD to the upside out there. And that is what's going on inside of gold. Had a request as well during the break to take a look at, this was via email, to take a look at National Health Investments, I believe, INVS. So it would sound like to me. What I don't know is the time period that the emailer is taking a look at the stock. So let's just start with a monthly chart. Again, ticker symbol is NHI. So we'll look at it on a monthly. We'll look at it on a weekly, a daily, see what kind of signals it is that we have here. So we're going to look at the trend first. That's going to be about the easiest thing for me to first do. And that trend is taking me back into November 1st of 2008. So I'm going to use that as my trend line. And then I'm going to use right here, I'm going to use this as the trend, which is back, I'm using as the next touch point, the low that was made in August of 2011. And what we can see is as price inside this equity had pulled back during September 2013, nice big candle session, bullish engulfing candle session on January the 1st out here, that held as a trend line. And during this month here, so in the month of August, July, you pulled right down into it. And so far in the month of August, on a monthly basis, this has broken its trend out here. So that's really not a good scene. We do have a little bear sash candle, bearish engulfing style candle. That's on the trading session of May 1st. That says that there's on a monthly chart some significant resistance up at that May 1st, 2013 high. That's at 72.90. 72.99 out here. So the monthly chart is saying at best this is consolidating. Let's look at the weekly chart. Well, let me actually go ahead and put the monthly chart market profile up here. Let's go see what that shows us. Alrighty. So the ticker symbol again is NHI. The market profile low on a monthly basis is 59.80. Now, that held for the month of July. If in the month of August you see it close below that, you'd have another thing on a longer term, another technical tool on a longer term chart that would say, what's happening to this equity out here. Let's take a look at what the weekly charts are showing. The trend line ought to remain on the screen out here. We may take a look at another trend line out here. No, I'd have to say, no, you just keep this in place out here with regard to its touch points. You can see on the weekly basis how those trend lines held. And now on a weekly basis, last week you punched through that. You're below a market profile low. You've got a little high volume bar out here. It should suggest if you're inside this equity that you might want to test that November 18th area, and that's at a price level of about 57.22. And that's if you see a break of its most recent weekly swing point, which was April the 14th. That price level is out at 58.85. So the question was how, I think the question was, look on my phone here, the question was this. how does this look? So I hope that this is assisting with how this looks. So far on the monthly, it's kind of saying not looking as good as it should because it has not held support. On a weekly, it's saying, shoot, it's broken a trend. Now, when you break a trend, you typically price tries to get back up inside that trend, and if it tries to get inside that white line and rejects that area, which we're going to use as the 60-49 area, the weekly market profile support level, then you ought to see price pull back and continue to pull back out here. What would we see out here inside this equity? Anything else that sticks out? Nothing really. You just have to use natural swing points. So a break below April 14th's low on a weekly basis of 58.85 brings the swing point from December 30th, 2013 into place, somewhere between 54.75 and 57. Now to finish this out, let's go take a look at the daily to see how this looks, see if we've got any different picture out here on a daily chart. We've got those same trend lines out here. Let's take a look at A to B equals CD down patterns. The A point on this on the daily, that's going to be the high from June 9th. Your B point's going to be the low on June 18th. The C point is going to be June 23rd. It's already made a 1 to 1.272 A to B equals CD to the downside. No bullish reversal signal here. It is inside an oversold level, so you should expect some kind of bounce, maybe a sideways move in order to work that condition off. But short of some type of sign of strength inside this equity, it looks like it has broken its uptrend out there, and maybe there would be better equities for you to take a look at. So that is how NHI, National Health INVS, is looking. I would have to say the health checkup on this is not as good as probably some other stocks that you might want to take a look at. In fact, if we take a look at things that are moving in the marketplace, other things to possibly take a look at, let's go see what's moving and grooving to the upside and to the downside. Let's take a look at Priceline out here. PCLN is the ticker symbol. On the daily chart, it's up $11. It's up about 1%. Let's go see what it is trying to do out here. It's traded into its swing point of a potential A to B equals CD to the downside. So it's moving towards its point of control, its congestion area where price is most comfortable, where there's a ton of buyers and sellers. That's the July 7th high. And that is at a price point of $1264.50. $1263.99 is that point of control area. Price was moving up today into that swing point. That swing point being July 7th, which has 685,000 shares. It's moved up this morning with 230,000 shares. So volume is not too bad inside Priceline as it continues to move higher. If we take a look at Priceline out here, what can we say about Priceline? Not really consolidating just yet. It does have this high volume up low out here that has not been tested. So any further weakness inside Priceline, and as long as it doesn't get above the 1264.50 level, it still offers more of a message that it probably wants to, now what do I say, use the word probably. You got a high volume low. And until we see a break topside out here, it says that a high volume low is going to be tested. That's at the 11.1152 to 11.38, 11.38.46, I believe. 11.38. Where is that? May 11.52.98 is the high from May the 8th out there. That is where price ought to at least test. That's on Priceline. You've got, let's look, Coors. Let's go back and take a look at Coors. We looked at it last hour, but Michael Coors moving down with volume. And look, good numbers out here, no question about it. They grew their revenue for the first quarter by 43%. Now, I don't know what same-store sales were, but they're growing. And net income was up as well, up 47%. No, what the net income was... it's disappeared from my screen. I think it's disappeared from my screen. Net income. No, net income $187 million versus $125. That's a pretty nice beat. Nonetheless, let's go to the most fundamental thing that's going on with the equity. What are the shareholders doing? And the shareholders are selling. It's down with volume so far today, 11 million shares to the downside out here. When we take a look at Michael Kors, it is this is the daily chart out here. if it breaks another swing point, which is the swing, it looks like, let me pull this and expand this out here. This is a swing point from the trading session of January 16th. That's not good. That's at $74.11 out there. And you're moving into that with volume. That only had 5.6 million shares. You've already done today 11 million shares. So that is not looking good for Michael Kors. So the markdown continues inside of KORS. And that markdown here on a weekly basis also not good because that last sign of strength inside this. So coming back, a week is obviously not over, but coming back into that February 3rd sign of strength out there, that had volume of 47 million shares. We'll see what it does this week, but it came back with 45 million shares the week ended July the 14th out there. So the core is moving to the downside. We took a look at ITT, El Pollo Loco, recent IPO. No reason to go look at that. I think it's only been in the market for a week or so. It's off about 8% though this morning. Biogen, BIIB. Let's go see what Biogen is doing. Let's come and take a look at a daily time frame chart on this equity. This had a fairly nice sign of strength here recently. Looks like it's trying to get inside that gap and maybe come back to the sign of strength. That sign of strength took place on July 23rd, up with 4 million shares. When it did that, it took out a B point that only had 700,000 shares. So at this stage, Biogen, BIIB, has a 1-to-1A to B equals CD to the upside. 60.91 is its price projection, and 60.91 would take it back to the March 19th level. That is its swing point high, which is priced out at 358.89. So on the retracement here, on the pullback, it's actually pulling back, and where it broke out from was on July 22nd. That breakout out there, July 22nd, the low of that was 302.94. And if it can pull back with less than 1.2 million shares, but of course the benchmark is 4 million shares, that might set up a decent buying opportunity. So far today, pulling back with 262,000 shares in a little over hour of trading. Let's take a look at the weekly chart here for Biogen. Let's go see if it is where it's trading in reference to its market profiles. And trading right into resistance, old resistance, which is right around almost exactly where it's trading as we speak right now. So a continued lower close suggests that probably 308.71 becomes an area of support. As we take a look at volumes out here, let me see on the pullback when the biotechs were really out of favor back in the April time frame out here. Volume, nothing too hugely unusual. There certainly was accelerating volume inside this the weekend of March 17th, March 24th. And it made a low with some volume that was tested with lighter volume the following week, so April 7th. So there's really no reason for Biogen, BIIB, to have to get all the way back to the lows from April 7th, which is down at 273.73 out there. Let's take a look at oil. Let's take a look at light sweet crude. Let's go see what it is doing. We looked at gold. Why don't we go take a look at light sweet crude? Right now, light sweet crude is trading up about 39 pennies. Let's look at light sweet crude on a couple of different time frames. But first, let's start it off. We'll take a look at the daily chart out here. It's going to be just a little bit delayed. 98.17 is what I show here. So if we take a look at the daily chart for light sweet crude, it still has the potential to form this A to B equals C to the downside. The B point on this is the trading session from July 15th, and that low out there is 98.02. Now, you've rejected that area, 98.02. You're rejecting it today. Friday's close was at 97.88. So it closed below 98.02, and the downtrend remains intact. We can see here that light sweet crude has moved into the oversold territory out here. So the bounce on a daily basis that we're seeing here is nothing more than just a sideways move. If you see light sweet crude on a daily chart get above 99.06, well, then you have a different message. If you were short, you might want to take a look at certainly tightening your stops or maybe even switch to more of a neutral stance out there. Right now in the markets, we've got the Dow is off 13 points. The S&P is flat. NASDAQ composite is flat. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Not a lot of action out here in the indices as we speak right now. The Dow is off about 16. S&P is flat. NASDAQ Composite is flat. The New York Stock Exchange flat. Basically a flat market. Maybe that'll change here during the live programming that we do at TFNN each day. 10 hours of live programming. Following this show, we got our man Basil Chapman. He'll be up next after Basil because it is Magnificent Monday. What we've got is we've got Larry Pesavento. After Larry, we've got Daryl Martin. He'll show you how to use the Nadex platform out there. Then after Darrell, we've got David White, Tom O'Brien show from 3 to 5 p.m., Andy Hecht from 5 to 6. So a full day of live programming out here. I had a request during the break, got an email asking me to take a look at two equities. So let's do that to round out the day's trading morning session for me. If we take a look at First Solar, that is one of the items requested. Take a look at First Solar. Talk about coming back into a breakout area. Wide price spread, accelerated volume inside this equity on March 19th. Now, the breakout level is at about $56.96 out there. I don't see anything. This really looks to be somewhat consolidating, and you'd like to see, the better buy on this is probably at the swing point from that this formed back here on May 20th. There was 3 million shares that took place on that trading session, anywhere between 57.80 to 59.97. That might be an area where you would consider buying. I haven't seen any really large volume in this equity to the downside, with one exception. That was on July 8th. There were 7 million shares to the downside, but that was going against 30 million shares to the upside. That's on First Solar, FSLR. It is trading just slightly below its market profile low out here on the daily. On the weekly chart, just to give you what that number is, let's see what that populates on my screen. 5205 is the weekly number. So getting below what looks like the area where it's at right now, that 5205, 5458 would be the area where you would start to try to take long positions inside of First Solar, and you do not want to see it close below 5205. You do not want to see it close below the 5475, really, but we'll use 5205. That's that March 17th, the breakout with big volume. The second equity that was requested was Sun Power Corp. SPWR is the ticker symbol. And as we take a look at Sun Power, it's trading right now at 33.44. Let's start off with the daily chart for this equity. This, too, has a little bit of a sign of strength out here, but it also has a sign of weakness. So unlike First Solar, this on Friday gapped down with some volume. And that was with about 5.4 million shares. Now, this had broke out topside, really. I'm looking at the trading session of June 16, 7 million shares, but you're trading below that. It's kind of pulling back into a breakout area. Let me go ahead and remove a couple of things on this stock chart here. That way you can, we'll clean the chart just a little bit, an area where I'll point you to focus on, and that is this gap out here. So in the case of Sun Power, it has been tested, I believe it once before. That's the gap that was formed at about $30.77. This broke out with 7.8 million shares. It had some additional follow-through on April the 25th. Price pulled back and tested that level back on May 16th as well as May 20th. That looks like the area where you would want to pay attention to it, but you want to see volume really pull out, lighten up as it moves into that area. Or otherwise, what you're going to look at inside of Sun Power is probably a test of the top of the gap. That would be the April 22nd high out there, right around 29.45. So, folks, thanks so much for joining me here on Marvelous Monday. Have a magical day. I look forward to seeing you bright and early tomorrow morning. Stay tuned. Our man Basil Chapman is up next. Larry Pesavento after that. Darrell Martin, David White, the Tom O'Brien Show. Have a great Monday. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.